Hello, good morning in Europe, good afternoon, good evening actually in United States. This is Ahura with another daily Outlook videos. As you know, in this series of videos, we are watching at the market, what's happened yesterday, what is going on in the market, and what is our expectations for coming for ongoing days or coming days in United States for tomorrow. Uh, Yesterday, everything was about the coronavirus, the latest variant of coronavirus. As you know, we were watching at what is the updates, and so as I mentioned yesterday, I told it, and also in the weekly outlook video that published yesterday, I told everything. We are reviewing the markets and economic data, economic activities. However, behind all of them right now, the focus is the coronavirus, the latest variant of coronavirus, and we were watching to see what officials going to say about that and how they are going to uh, how they're going to actually kind of to react to the news or possible actions. Yesterday, Mr. Biden told that there is no quarantine option at the moment in the United States, which helped the markets too much. And he told that they are pushing on medical companies to have a better vaccines and this vaccination process and stuff like that. So, but the healthcare companies and production of vaccine, more vaccines. So that's cooled off the market. That's a little bit actually not cool off the concerns in the market. And with the gun, while the concerns gone, so it helped the energy market to recover a little bit. It helped the stock market to recover. We will watch at that. And as you see in the U.S. dollar chart, this U.S. dollar chart, as you see the U.S. dollar chart with the decreasing the concerns, got the less demand, and the US dollar also was flat, kind of after a little bit increase again. It was a flat. However, if we talk about the US dollar, if we say about the US dollar, in a long term, still US dollar is going in on an uptrend, and we cannot see any reason to have the US dollar in a downtrend currently because even if not the concerns about, as I mentioned yesterday or days before, even if not the concerns about the coronavirus, the ongoing and better than expected economies, economic recovery, as you know, the V shape is amazing, is going on amazing. So while we have a better than expected data, it means that the economy is going to recover itself much better than expected earlier expectations, which it means that we have to go more, we have to wait for more hawkish policies, tightening policies from Federal Reserve, which will put more pressure on stock markets and demand, and will increase the demand for uh, US dollar. If you look at the markets, that what happened yesterday Dow Jones closed 0.68% higher, while SP 500 1.32 and Nasdaq 1.88% increase. So this increase was amazing. And right now, at the moment, at the Asian market, even if the Hang Seng in Hong Kong is losing more than 1%, but still Hank's Nikkei in Japan is increasing by 0.74%, and Shanghai is up by 0.23%. About the rates, this market situation with the increasing like confidence in the market about how the government is going to react about that, how the central bank is going to react to the latest news of the coronavirus. We saw U.S. 10 years bond increase again to 1.50%, that's like 1.55, 1.505% or 1.50 is good enough to say. So this is it means that the market. So when you see that the US dollar bonds, like US bond yields increasing, it means that the market's risk is lower. Besides that, yesterday Mr. Powell also had a testimony in the and in his testimony he mentioned about that the risks of the coronavirus is still bad for the labor market, and he told us that we have to be a little bit patient to see what is going on. I mean, just in general, should be patient about the virus and see what will be as a the result of the research right now, which is going on the virus, and it will take you almost 2 months, 2 weeks to see that what Omicron variant of the coronavirus can, what kind of what it can do, or how if it can uh, hurt the markets, and can it be the treat for the labor market or not, or for as well as for economic activities. So today and tomorrow again, Mr. Powell and Miss Yellen, they will participate in, about in the testimony, and they will answer the questions, the Senate's questions about the economic data. Yesterday we had a housing data from United States, and it was amazing and much better than expected. And today we have too many economic data. Today's Tuesday actually, or today, for United States tomorrow, it can be the Tuesday. Let's say the Tuesday. So the Tuesday is the most busiest day of this week. We're gonna have, let's say, from very beginning, we're gonna have, at the moment, so far we had building approvals, or in Australia, which it fell by 12%, almost 13%, which fell by 13%, which was like, it's not, housing market's not good in Australia. Housing credit also fell. Housing credit also was actually, housing credit kind of in the third quarter, 23.9 billion. Well, it increased a little bit more than, but still it's a weak. In China, manufacturing PMI and composite PMI. Manufacturing PMI increased to, from 49.2 increased to 50.1, but non-manufacturing or service PMI fell to 52.3 from 52.4. So a little bit, it was a little bit weaker than previous month. Later today, we have to focus on French consumer spending in and GDP in the Eurozone, and then we will have Italian GDP as well, right? Or not? Then we will have the Italian GDP, but most important, German employment data, and Eurozone inflation will be much more important to watch. Uh, Later in Canadian, in North American season, we will have the Canadian GDP, and then house price index from United States, which will be very important, and CB consumer confidence, which is one of the most important economic data to watch, the consumer confidence, and to see that how the consumers feeling about the economy, and how much they're ready to, how they're feeling much better confidence to go out and spend the money. And then again, as I mentioned, we will have the future Powell testimony and Treasury Secretary Yellen speak, and then Dallas service revenue, service the data, and then we have again the speeches from William, tax, the service sector. Oh, this is a Texas. Sorry, I'm gonna say Texas service sector outlook also today will be very important to watch. This is very important. Texas, one of the, the service sectors data these days is becoming important, because they're gonna tell us what we have to expect from the markets. And then at the last hours of the market, we'll have the Clarity speech. We'll have and the German Bull, also the German Bull Vice President Boch also will speak. These are the main important data to watch. However, still, so let's go to the market and see what is going on in the market. This data, as I told about the gold, so this weakness in the gold caused the weakness in the US dollar, caused the gold also to weakness. I mean, because of the reason was the less. The main reason of the weaker US dollar was the less volatility, or less risk in the market, which it was again the same reason that could put the gold under pressure. So that's why we see the gold weaker here in this area. However, the crude oil was got advantage of that, and increased a little bit from Friday's law. Yesterday was a little bit higher. Today also is with the lower risk in the market, and while we are the concerns about the coronavirus is decreasing, so we can see the oil in a higher levels. S&P 500, Nasdaq, and Dow Jones. You can see this is Dow Jones, this is Nasdaq. Nasdaq had a better than expected, as it was 1.88% gain yesterday, and still today it's holding its gain. But the thing is that so it's about the Nasdaq. It's that the Dow Jones also had a little bit gain yesterday, same as the S&P 500. However, about the stock market, as I mentioned several times, even if not the coronavirus, the better than expected economy and economic data will put the Federal Reserve under pressure to have tightening policy, which is not positive for stock market. So don't wait for higher numbers at the moment till year end and see the next meeting of Federal Reserves. About the cryptocurrencies market, after yesterday gain, again, it is on there. I mean, the total market is under pressure right now. From the technical point of view, actually, Ethereum, Ripple, and Bitcoin. From the technical point of view, they are kind of still in uptrend, especially as long as the Bitcoin trading about 56,000. However, the thing is that the point of the point is that the overall outlook, overall outlook, still we do not have enough evidence to say that the market is get out of this overall downtrend. So still we are in a downtrend in general, over a downtrend, and this downtrend still can continue. As I said, this we are in a border to say that okay, we can change that. I mean, the market condition can change. However, it is still taking a time, and we need a time. About 58,600, closing about 58,600 on the daily candles, can change the outlook. This overall market situation, and this what in general what is going on in the market and what's happened and what is our expectations from today. The data that is going to publish about the data. Let's say that the expectations is still to see a little bit better than expected data in United States. The data in Eurozone also supposed to increase a little bit, but the economic data from United States is going to be a little bit better than European Eurozone. So which it means that our outlook for Eurozone for Euro is still against US dollar. So it should be again still negative. Let's check the Euro USD. Euro USD, even if a little bit decrease and increase and decrease yesterday, still the general outlook for Euro USD still negative. We do not see any evidence here right now from the fundamental side to see that okay, the euro going to react better. Today's economic data will suffer from US dollar because we are waiting for better than expected economic data. This is general what is going on in the market and the expectations. Hope it was useful for you. See you guys again tomorrow. Yeah, have a good day and take care about your trades. Bye bye.